You know, they've got these drawings going on.
Yeah.
And I got tickets for it.
So you gotta listen. And
Well, that's impossible. I should have given it to somebody. So I'll split whatever the winnings is. I'll split it with you, because these have been sitting here, but I haven't even been able to look at the numbers. And I don't know as if I would see. I found out I have cataracts.
Really?
Oddly, yeah. And let's twist your mic.
Are we on yet? Okay.
Well, when we
Not
say,
yet. When you tell me when.
well, we've been live the whole time, so we're on.
Well, you're not old enough to have cataracts.
That's what I was thinking.
Yeah.
How old do you think I am? Just
50s?
curious. Good guess. 50, turning 52 next month. Good guess.
Early 50s, yeah.
Good guess.
That's because that's my age. I turned 50 this year.
Ah.
So everybody's my age.
Everybody's your age. All right, well, we'll start. I was going to wait till she's done, but we'll start.
Yes.
This is, again, KQCK Live, broadcasting from the Phoenician, the National Association of Hispanic Realtors, of Hispanic Real Estate Professionals, I guess, N.A.H.R.E.P. And Mark Windsor, Tom Diller will join me in here in just a minute. We have with us Sue Pullen. Sue Pullen with Fairway, Independent Mortgage Corporation. And one of the things we're going to focus on is talking about reverse mortgages. Now, let's start, Sue. How long have you been in the mortgage business?
Well, I've been an originator for about 7 years. I just really am starting my 7th year.
Okay. I would imagine most people have no idea what I mean when I say reverse mortgage.
Well, and what they do think is usually wrong.
So
There's a lot of wrong information
I
out
would
there.
imagine.
You know, the
Some
biggest
people-
myth I would tell you is that people think you don't keep your house. That you get a reverse mortgage and it belongs to the bank. Your house belongs to the bank.
Right?
That's the biggest one.
Well, let's start by explaining what a reverse mortgage is.
Well, it's a mortgage that is allowed for 62 years old or older, so seniors. They have to own their home, and they want to live in it for the rest of their lives, but they can't necessarily afford. You know, they need a little bit extra. They need, they just don't bring enough money into their household to pay for their medications, to make that mortgage payment. So doing a reverse mortgage allows them to use the equity in their house. They use the equity in their house to live in there and to never pay a mortgage payment again for the rest of their lives.
Okay,
so there's no mortgage payment for as long as they live.
In the
have
house.
to adjust. I had to check my earphone because I thought by looking at the angle of the mic.
May I turn this way? Okay. There, is that better? Is that better?
Yes.
Okay, good. Okay,
I had
good.
to double check on my earphones to make sure that we were getting
Can
the
hear.
sound.
So 62 years or older, they
Yes.
take out a mortgage, which really isn't really a mortgage.
It is a
It is a mortgage.
In
and
every
it's a
sense of the
mortgage.
word.
Every
Yes.
sense of the word, but there's no payment. So really,
Well, there
But
is
most
payments.
people-
It's opposite payments. There's a payment, all right.
There's a payment. Their interest is accruing every month,
Right.
but instead of you making the payment
Goes to the balance.
bank, it just gets added onto the balance.
okay.
So it gets bigger and bigger and bigger. So you will never get 100% of the equity out in a reverse mortgage because they have to have room to add that interest every month.
But back in the day, years ago, and she said they've been around for like 50 years.
50,
when,
60 years.
Yeah, so when I was selling them, it was not the beginning, and I wasn't actually selling them again. I had people working for me that were selling them, and then I owned a little mortgage brokerage for about a year or so is all, and yes, it collapsed. Anyway, what we would do is when somebody either retired so their income dropped, or a spouse died and their income
Right.
dropped, or something would happen in their life that would change their income. So all of a sudden they had a stable income but not sufficient to pay all their expenses. They had a choice. They'd either have to sell their home and get that equity to deposit in an annuity or something, or we'd tell them, you can do this reverse mortgage, and it actually gives you money every month to
In
live
some
on.
cases, it just pays off your existing lien. It pays off the existing mortgage, and you're ahead of the game because you don't have that mortgage payment to make
Oh, really?
anymore.
So it's not paying, because we always had it, so it's paying some dollar amount out. But what you're saying is they wouldn't get money, but they wouldn't pay money. It would just build in there.
Right. It depends. It depends on
I
what
didn't
you
even
owe.
know that was
If you owe nothing on your house, you can either take it out as a lump sum, whatever cash there is, or you can get paid monthly for the rest of your life.
Yeah, those are the kind we did.
Right. But if you own a house and you have an existing mortgage on it right now, and there's enough to pay off that mortgage, well, there's nothing left for you to get each month, But what it does is it pays the balance off. So now you're ahead of the game because you don't make that mortgage payment, that $1,500 mortgage payment you're making. It eliminates that. If there's anything above and beyond that, it either gives you cash or it'll give you a monthly stipend.
I see.
Depends on the value. It depends on your age. It depends on how much you owe on the house, and it depends on what the value of the house is.
So why is age a factor? Though I know that, my listeners don't know.
Well, the age is a big deal. Number one, you have to be a senior. You have to be 62 or older. But they base their actuary tables are based on living in the house until you're 100 years old. So if you're 62 and you take it out, you have a lot of years before you're gone. But if you're 90, you have a lot less. So if you're 90 years old, you're going to get a lot more out of the house than you would if you're 62.
Do they check credit scores, creditworthiness?
They check your credit, but right now in the way they're doing, and this can change at any point, but right now you don't deal with your credit scores. Even bankruptcy, you can be one day out. Check is to see if you have any federal debt.
If what?
If you have any federal debt. And you know what I'll tell you the biggest reason why people cannot do a reverse mortgage is because the grandparents co-signed student loans for their grandchildren, and their grandchildren defaulted. Yes. So if they default on it, that's federal debt, then they have to rectify that before they can get a reverse mortgage.
Okay, let's talk about the inevitable. They die. What happens to the property?
It goes to whomever they will it to. But if it's two people, let's say husband and wife, they're both on the reverse mortgage. If one dies, it just continues until the last surviving person is no longer in the house. So when they both die, now what happens is it goes to whomever they will it to. So let's say they will it to their kids. The kids have a choice. The kids have to pay off that reverse mortgage, but they get to choose how they want to do it. They either keep the house and refinance it, or they sell the house, pay off the mortgage, and keep the difference, whatever equity.
So let's say there's no equity. Do they just turn it back into the bank, just walk away?
Yep, they can. It's a non-recourse loan. One of the things that President Bush put into place, President Reagan put into place when he was president in the 80s, is he created some safety nets for seniors. And one of it was making it a non-recourse loan. So being a non-recourse loan, if you're upside down, you never have to pay anything more than what that house is worth, including your heirs. They don't either. But you do have the ability to short sell it, to try to sell it. They work with you, and they don't kick you out. The lender doesn't say, okay, you died, now you got to sell this. No, they give you 6 months to work with it, and then they can extend that another 6 months.
How many lenders offer this?
It's gone down a lot in the last few months. There's probably 15, 20, 25, 30.
Who are some of the main ones you work with?
We work primarily with Generation Mortgage.
Okay.
Financial Freedom was a big one that I worked with in the past, and B of A, Bank of America. They've all gotten out of it. They still service it. Reverse It, Urban Financial's another one. There's some good ones out there.
I wonder why they got out now. You'd think because now that the market's starting to go up, that's the time.
That's when you need it. Yes, I don't know why.
That makes no sense. I can see why they would have gotten out 5 years ago.
Right, and it used to be 5 years ago. 5 years ago, it was very expensive to do a reverse mortgage. You could pay $30,000, $40,000 in fees.
Holy.
Well, they made changes to that. They've limited the fees, so it's real competitive, like a regular mortgage now, like an FHA. It's insured by the government. It's backed.
I just noticed that our cameras are pointing the wrong way, though. If they're pointing that way, we would have seen a near accident. Did you see that?
No, what happened?
She was stumbling on her high heels and almost turfed it.
I thought she won something. They're doing some.
I don't know. She was turfing it on stuff.
So I'm not sure this even matters. So this is a real layman person asking this question. Does the interest rate, almost like a lease, people don't care if that there's a rate attached to it, but you said the magic word a couple minutes ago that it adds to the balance.
Right.
So do people care what the rate is? Does it even matter to them?
Yes, and here's why you care.
Because the balance can grow faster.
That doesn't matter as much. The interest rate determines how much you get when you take out the reverse mortgage. So if you're in a higher interest rate era, you're going to get less equity out of the house. If the interest rate is lower, you're going to get more. Once that amount is set when you initially take it out, though, it doesn't matter if the rate continues to go up, you still get that same amount. And you can do an adjustable.
But the balance
or
will
a
increase
fixed.
faster.
Yes. But if you're gone, do you care?
Well, it depends on how much.
Well, the
equity you have.
heirs.
And you care about your heirs. That's the other reason why people don't do one. Is
remember, I do
they
estate
really
planning.
want, yes, they want to give their kids something. They want to leave something of value to their family. I have one
Do you have
gal.
riders?
What?
Do you have riders that can go on, like insurance rider or life insurance rider or something?
No.
See, that would be cool.
That would
See,
be
I just
cool.
came up with a new idea.
Yes.
Because for estate planning, they would love that. Of course, they could do an independent policy depending on their health.
Right. Yes.
But riders are good because they're relatively inexpensive typically.
Yeah.
A mortgage rider.
Right. Right. Yeah. No,
Okay, we have a
don't
new
do
idea.
that, though, but that's a good idea. Yes. But I've got a gal who's doing it. Who's doing one right now. Her husband just passed away, and she has no heirs. She's got no family. She's got no kids. She's got brothers and sisters. So and she left. She was left with $1,600 Social Security payment from him, and a $2,000 mortgage payment.
Wow.
She can't afford it.
So this would wipe out that payment.
She thought she had to get rid of her house. She thought she had to sell her house. So I asked her, what about a reverse mortgage? Do you need, and she's got a lot of equity in there. Is it more important, though, to live in your house, or is it more important to leave it to your brothers and sisters because she has no children?
Certainly that's because they have kind of a reason to stay in the house with all the memories and all that.
That's
but in some
exactly
cases, it
right.
seems like it'd be better to sell. You
In
got the
some cases
equity.
it is.
Yeah,
Yeah.
live in an apartment or
Every person has a different reason for
Sure,
what they
sure.
decide, just like any kind of mortgage we do.
right.
And you got to find what's the right thing for that person.
Right,
Yeah.
right.
Yeah. But in her
makes sense.
case, she'd rather live in the house with all her memories.
Right,
She doesn't have any
right.
kids to leave it to. She'd
Right,
rather use it.
right.
She built the equity. She wants to use it.
You know, in that case, what an amazing product where you could just not have a payment, stay there, and not have the worry about that,
Not have
and
the
really
worry. Yeah.
become impoverished.
That's right. And you can actually live. You can actually survive. Yeah.
Well, that
So
is
it is.
awesome. You know, I think they're breaking for lunch. Is that what
I
they're
think
saying?
so.
Or
I
s-
think so.
All right.
So, Sue, it was a pleasure meeting you. Thank you for
Super.
coming by.
Wait,
Yes.
wait. Go ahead and let our listeners speak
Oh, yep.
right in the mic and let our listeners know how to find you.
Well, again, it's Sue Pullen, and I'm with Fairway Independent Mortgage in Tucson, Arizona. My office phone number, 520-744-2292.
Thank you. You've been a delightful
Thank
guest.
you.
Pleasure meeting you, Sue. Thank
Awesome.
you.
Thank you.
Yep.
Mark Windsor, Tom Dillard, KQCK Live, broadcasting from the Phoenician National Association of Hispanic Real Estate Professionals, their annual convention.